Hey guys, in this video I'm going to walk you through how I turn every single Friday into a $300 payday. I'm going to show you exactly how I do this, the strategy I use, the entry criteria rules, the exit rules, everything step by step so that no matter where you are in your trading journey, you can implement this to start making $300 a day too. And there's only three numbers you ever need to know: 9, 1.5, and 200. The three numbers you can see here on your screen right now. And so again, I'm going to walk you through this, and I'm even going to walk through a real trade example if you stay towards the end. So let's dive into it right now. So number one, what options approach are we using? We are using credit spreads. What are credit spreads? Credit spreads are essentially a bet that a stock will stay above a certain level. So let's say that the stock is trading up like this, and I'm like, wow, look, it formed a low right here. That means that if I put my level right here, and my stock stays above this level, I make money. So how exactly does this work? Well, it just means I pick a level. If the stock goes up, I make money. If the stock goes sideways, I make money. If the stock goes down but stays above my level, I still make money. That's the beauty of a put credit spread. Unlike stocks, you need to be super right on the direction. With credit spreads, you only need to be kind of right. If it goes kind of in your favor or even goes kind of against you, you still make money. The only way you lose money if it goes below that level you made. So that is what a credit spread is. I'll show you towards the end of this video how to actually execute one and put one on. But before you get into the three numbers you need to know, you need to be aware of what trend following is. Trend following is the idea of following the different waves in the market. If you've never realized it yet by looking at a chart, the market is either going up or down, up or down, up or down. And so with that, we can capitalize on that movements by using this credit spread approach. So number one, we need to know which way is the market trending. We're only going to take this trade. I'm going to walk you through if the market is trending up. So right here you can see I have a moving average installed on the chart. Whenever the moving average is moving up, that is going to be our criteria to enter this trade. When the moving average is trending up and the stock is above it, that is our entry to put on this trade. Again, you can see here, this would be an entry criteria any one of these days. This right here would be an entry criteria. This right here would be an entry criteria. And this right here would be an entry criteria. Anytime the stock is above this line, it's an entry criteria. So that's what you need to know. Now, the three numbers that you need to know after knowing that. So now that we know when we're going to enter, we know how are we going to put this trade together. And that's these three numbers: 9, 1.5, and 200. So on the 9, we're going 9 days out. If you don't know anything about options, when you put on an options trade, you need to select your days until expiration. And so right here, we're picking 9 days until expiration. That means whatever the day is, we're going to go out 9 days further, and that's our expiration date. I'll show you exactly what that looks like when I walk through a live trade example. Next is 1.5%. This is how far out of the money we're going to go here with an example. So let's say we're on this phase right here where I said when the stock is above and the line is moving higher, this is how we know that we are trending up, and this is our entry for criteria. Well, let's say we pick this stock to enter in on, or I should say this candle to enter in on. So let's say we picked this candle to enter in on. So what we're going to do is our level, the level that we're betting the stock will stay above, is going to be 1.5% below this candle. So we take this candle right here, we go 1.5% below it, 1.5% right here, and that's at 44432 if you can see the sidebar of the chart. So that means our level that we're going to pick, rounding to the nearest whole number, is 444. So we're going to put on this trade. That means we're going to structure the trade around the level 444. It means as long as the stock stays above the $444 level, we will make money. And as you can see here, the stock is trending higher because that's our entry for criteria, or criteria for entry. And what we're seeing here is that if it stays above 444, we make money, which it clearly did in the next 9 days. So that's an example of a trade right there. So again, 1.5% out of the money, OTM, away from the stock. Next, 200. What is 200? 200% is our stop loss. And so what does this mean? It means that we're going to try to enter a stock around 25 cents. Again, this level right here, the 1.5% out of the money, should get us very close to the $25 mark, which means we're going to collect $25 for putting this trade on. It doesn't quite make sense yet. Right after this point, I'm going to show you a real trade example. So we're going to be collecting around $25 for this trade. So what's a 200% of that? That means $50. So that means that we're going to exit the trade for a stop if it gets to $50. So what does this mean? That means our profit is $25. And if we're exiting at 50, from 25 to 50, what's the difference? A $25 loss. So we stand to make $25 and we stand to lose minus $25 as well. So with this approach, not only do we have a decently high win rate in the 70 to 80% range, we also have a 1-to-1 risk to reward. That means for every trade we are standing to make, the same amount we are standing to lose. And I'll walk you through that here in a second. Now, let's dive into a real trade example. All right, so if we go to the current day of the market, you can see right here, the line is trending up. The stock is above it. This is an instance where I would say the stock's a little too high above it. We'd like to see just barely above it to really start getting that momentum, but we're still gonna use this for an example. So now it's trending up. So we're gonna go 1.5% below the current price. Again, we like to wait for the stock to close, but this is for a current example. If we go 1.5% down, that gets us to the 430.5 level. So we're going to say 430, 431 is going to be our level. So how do we set this up? I'm going to go to Robinhood because they have a very easy to use platform. I'm going to go on to SPY, which is the ETF that I just had pulled up on this stock chart. I'm going to go into Trade SPY options. From there, I'm going to go into Builder, and Builder, it's very simple to set up a credit spread. I just say put credit spread. This means that when betting that a stock will stay above a certain level. Now, remember what I said. What are those three numbers? 9, 1.5, and 200. So first off is 9. We're going to come here to the date. We're going to find something as close to 9 as we can. Look, November 16th, that is a 9. Sweet. Next, we're going to look for our level 1.5% below, right? That's our 1.5. We've done 9, now 1.5. So 1.5% below is going to be the 430, 431 level. So I'm going to scroll down until I hit that level. So you can see here, 431, 430. So you can see right here at this level, it's currently trading around 17 cents. Like I said, we like to target 20 cents. So I'll actually move that trade up to the 432, 431. This is close to 20 currently as trading. It's a very strong green day, so that's why it's very hard to get into this trade. During slower green days, smaller green days, and red days, you can easily enter these trades for 25 cents or more. But because it's a very strong green day, it's really hard to get into this trade around the 25 cent mark, but I'll have to take it around 20. So again, that's what we're going to do. I'd like to get in anywhere from 20 to 25, but I like collecting as close to 25 as possible. So 432, 431 is the structure of this trade. That's the level that I am betting on for this trade. So you can see here, I'm going to enter in at the 20 cent mark. So I'm going to get in 20 cents. And that means that whenever I see the spread hit 40 cents, which is going to be my 200% stop loss, then that is going to be where I exit. So again, this is a very simple overview of my strategy, of what I use, so that every single Friday I make that amount of money. Now, some people may be like, okay, Austin, how exactly do you set up the trade to make that much money every single Friday? And let me show you how that works. Like I said, all these trades have a 9 days until expiration. And so if it has 9 days until expiration, that means we can look at it like this. Let's say this is 1 week. Let's say we'll call this 1 week. This is the next week. We'll call this 2 week. We should really be week 1, week 2, week 3, but you get the point. Now we go 3 week. Okay, here. So in week 1, let's say that's this week, I put on, my goal is to put on 2 trades every single week. And so when I put on those 2 trades every single week, then I have 2 trades expiring in the next week. So here we go. Let's say that this, I put on these trades, let's say on Wednesday. So that means one Wednesday is going to be 7 days, and then 2 more days, because 9 days until expiration is Friday. So right here, if I put on 2 trades on this Wednesday, that means next Friday these trades will expire, will be expiring. 75% of them will expire worthless, which means we get to keep all the money. So there's a 75% chance that I have a $300 payday on this Friday. And how does this work out? Well, like I said, every single Wednesday we're placing a trade for the next Friday. So as long as you're placing a trade on Wednesday, you will have a payday on Friday, because that's how each trade rolls over. So we're going to have multiple trades in different periods so that we can get that $300 payday every single Friday. So if you're placing a trade on Wednesday using this criteria, using this setup, there's a very good chance that you'll have a $300 payday depending on your size of your account and your trading size. You should have a decent payday on Friday. So that's how I use credit spreads. That's how I structure them. That's how I enter them. And I hope that made sense with the live example. Now, again, just some best practices. Remember, you want the stock to be very slow moving or a red day that just allows you to get in at a better price. 2, remember to follow the trend. And number 3, these are your key numbers, 9, 1.5, and 200. If you follow these, you should be set. If you want to learn more about the specifics of the strategy in depth, I have a completely free course in the first description link down below that will walk you through the actual specifics of the strategy instead of the overview. It's going to walk through, hey, do this, do this, do this, do this in this order, and it will help you make a lot of money. All right, guys, see you in the next video.